India's decision to continue purchasing Russian crude oil, despite U.S.-imposed tariffs, highlights a significant geopolitical and economic stance. In August, the United States levied a 50% tariff on Indian exports, including a 25% penalty specifically targeting India's import of Russian crude. This move by the U.S., aimed at pressuring India to cease its oil trade with Russia amidst the ongoing conflict in Ukraine, could potentially reduce India's annual GDP growth by 0.6% to 0.8%, according to Citigroup's estimates. Indian Finance Minister Nirmala Sitharaman has asserted that India will prioritize its economic needs, particularly in securing affordable energy sources over external pressures. India's strategy to import Russian crude oil, which has risen dramatically from less than 1% to 37% of its total imports since the Ukraine conflict, is primarily driven by cost advantages. Russian crude is significantly cheaper compared to oil from the Middle East, with prices reported at $68.21 per barrel, versus over $570 from Iraq and $637.40 from Saudi Arabia. This price differential has prompted major Indian refiners like Reliance Industries and Indian Oil Corp to increase their intake of Russian crude, despite potential diplomatic strains with the U.S. Concurrently, India is advancing its clean energy production, with a 20% increase in output, reducing its reliance on fossil fuels and potentially altering its long-term energy strategy. This dual approach underscores India's balancing act between immediate economic benefits and its transition towards sustainable energy sources.
Oracle Corporation's co-founder Larry Ellison briefly became the world's richest person after a significant surge in Oracle's stock, driven by a series of lucrative cloud computing contracts. These contracts, collectively valued at over $300 billion, involve major companies such as OpenAI, Meta, NVIDIA, and Musk's xAI. The announcement of these deals, particularly the historic $300 billion agreement with OpenAI, set to commence in 2027, led to a temporary increase in Ellison's net worth to $393 billion, surpassing Elon Musk. However, by the end of the trading day, Musk reclaimed the top spot as Oracle's stock slightly declined. Oracle's strategic expansion into cloud computing and enterprise software has been a key factor in its recent success, with expectations of boosting its cloud infrastructure revenue by 77% this fiscal year and potentially reaching $144 billion in 4 years. This development highlights Oracle's growing influence in the AI-driven transformation of various sectors, as the company positions itself as a major player against competitors like Amazon Web Services and Microsoft Azure. Meanwhile, Musk's wealth, largely tied to Tesla, faces pressure from declining electric vehicle sales and market share losses, partly due to his controversial political endorsements. The discrepancies in wealth rankings between Bloomberg and Forbes underscore the volatile nature of billionaire valuations, influenced by fluctuating stock prices and differing methodologies. As technology and cloud services continue to drive modern business landscapes, figures like Ellison and Musk reflect broader market trends and shifting investor priorities, with Oracle's AI ventures generating optimism compared to the more cautious sentiment surrounding Tesla's endeavors.
Canadian shipbuilder Chantier Davy Canada Inc., under its parent company Inocha Group, is expanding its operations into the U.S. by establishing a new entity, Davy Defense Inc. This move is part of a strategic effort to overhaul Texas shipyards in Galveston and potentially Port Arthur, aiming to secure a contract with the U.S. government to enhance its icebreaker fleet. The initiative aligns with the icebreaker collaboration effort signed by Canada, the U.S., and Finland, facilitating the expedited construction of polar vessels. The Texas facilities are set to undergo a $1 billion upgrade, mirroring the modernization efforts at Davy's Quebec shipyard, which is currently being enhanced with an $840 million investment for the construction of a new Polar Max icebreaker. The establishment of Davy Defense Inc. is a strategic maneuver to navigate U.S. national security legislation and foster closer ties with the U.S. federal government. Led by CEO Kai Skavarla, the new entity aims to leverage Davy's experience and Finland's icebreaker expertise to deliver Arctic security cutters to the U.S. Coast Guard within a swift 26-month timeframe. This expansion is expected to significantly boost the local economy, potentially creating over 7,000 jobs statewide through the supply chain and 2,000 jobs directly at the Gulf copper facilities. The U.S., with only 3 polar icebreakers compared to Russia's 40, stands to benefit strategically from this development, enhancing its Arctic capabilities and security posture.
The latest report from the U.S. Energy Information Administration, EIA, reveals an unexpected increase in commercial crude oil inventories by 3.9 million barrels, reaching a total of 424.6 million barrels, contrary to analysts' expectations of a 1 million barrel drawdown. This inventory build underscores the complex dynamics of the current oil market, characterized by robust U.S. crude production at a record high of 13.5 million barrels per day, juxtaposed against declining export demand. U.S. crude exports have decreased by 1.1 million barrels per day, reflecting weaker international demand potentially linked to slower economic growth in key markets such as China and Europe. Despite the inventory increase, U.S. refineries continue to operate at high capacity with utilization rates at 94.9%, defying predictions of a slowdown. This robust refining activity occurs amid geopolitical uncertainties and a strategic replenishment of the U.S. Strategic Petroleum Reserve, SPR, which saw a modest increase of 514,000 barrels. The replenishment of the SPR is a strategic move to buffer against potential geopolitical disruptions, although it may also limit the downside risk for oil prices if inventories continue to rise. The oil market is poised for heightened volatility as it navigates these supply-demand imbalances, with potential implications for oil prices. Seasonal refinery maintenance, OPEC Plus production decisions, and broader macroeconomic factors could further influence market conditions. Investors should prepare for price fluctuations driven by these dynamics, as the interplay between strong U.S. supply and cautious global demand could lead to significant market shifts.
Chancellor Friedrich Merz of Germany has proposed delaying the country's coal exit until new gas-fired power stations are operational. As part of a broader strategy to ensure energy security, this suggestion comes amidst Germany's commitment to phase out coal by 2038, a goal that is under scrutiny due to the need for reliable backup power sources when renewable energy supply is inconsistent. The shift from coal to gas is seen as an interim step, with plans to eventually convert gas plants to hydrogen, albeit at a high cost that requires substantial subsidies from the European Union. Merz's proposal highlights the challenges facing Europe's largest economy as it balances environmental commitments with energy security. The German energy regulator has indicated that an additional 22 to 36 gigawatts of capacity will be needed by 2035, underscoring the urgency of developing alternative energy sources. However, the transition strategy faces potential hurdles, including parliamentary approval and regulatory compliance, as well as criticism from renewable energy advocates who fear that slowing down renewable expansion could jeopardize climate goals. The outcome of a forthcoming energy study is expected to influence Germany's energy policy direction significantly.
Boeing's defense branch is on the brink of resolving a strike affecting its facilities in Missouri and Illinois, as labor leaders and the company reached a tentative agreement. The International Association of Machinists and Aerospace Workers Union, representing approximately 3,200 workers, announced that a vote on the new contract will take place on Friday. The proposed 5-year contract offers an average wage increase of 45%, marking it as one of the most lucrative deals ever put forward by Boeing to the union. Boeing's vice president, Dan Gillian, expressed optimism that the agreement will be accepted, allowing the company to resume production on critical defense products, including the F-15 and F-18 combat aircraft and the MQ-25 unmanned aircraft. This development follows a month-long strike that began on August 4th, after workers rejected a previous contract offer, prompting Boeing to initiate a recruitment drive for permanent replacements. The strike is part of a broader labor unrest at Boeing, coming after a significant stoppage in its commercial aviation sector, which involved 33,000 workers. The resolution of this strike could stabilize operations at Boeing's St. Louis facility, originally part of McDonnell Douglas, and potentially improve investor sentiment towards Boeing's defense business, which plays a crucial role in the company's overall portfolio. The outcome of Friday's vote will be pivotal in determining the immediate future of Boeing's labor relations and production capabilities in its defense division.
Kodiak Robotics Inc., a leader in AI-driven autonomous vehicle technology, has achieved a significant milestone with the delivery of its first driverless truck equipped with the Kodiak driver system, marking a pivotal step in scaling autonomous trucking capabilities. The truck, produced in collaboration with Roush Industries, was delivered to Atlas Energy Solutions, which has already integrated 8 such vehicles into its fleet as part of an initial order of 100 trucks. This development underscores Kodiak's strategic move to revolutionize the freight and logistics sector by leveraging advanced AI technology to enhance efficiency and scalability in operations. The partnership between Kodiak and Roush, announced in mid-2025, aims to establish a robust production line capable of manufacturing hundreds of autonomous trucks by the end of 2026. The trucks are outfitted with Kodiak's proprietary sensor pods, AI compute and safety systems, designed to be modular and vehicle agnostic, allowing for broad application across different truck models. This initiative aligns with Kodiak's broader strategy to penetrate the global trucking market, valued at over $4 trillion, by addressing critical industry challenges and meeting increasing customer demand. In addition to its operational advancements, Kodiak is set to go public through a merger with Ares Acquisition Corporation II, with a shareholder vote scheduled for September 2025. The successful completion of this business combination would enable Kodiak to list on NASDAQ under the symbols KDK and KDKRW, thereby providing the financial backing necessary to accelerate its market strategy and expand its technological footprint in the trucking industry. This move is anticipated to enhance Kodiak's competitive positioning and drive significant growth in the autonomous vehicle sector.
Reddit Inc., NYSE, RDDT, has achieved a remarkable milestone as its stock price surged over 350% year-on-year to a record high of $261.13, driven by strong earnings performance and a significant increase in daily active users. The social media company's revenue grew by 70% over the past year, reflecting its successful strategy of diversifying revenue streams and expanding its user base. Wall Street has responded positively, with analysts raising their price targets, highlighting Reddit's potential in the advertising sector and its extensive library of user-generated content as an asset for AI data licensing. The company's second quarter earnings exceeded Wall Street expectations, bolstering investor confidence. Reddit reported a 21% increase in global daily active users, reaching 110.4 million, surpassing analyst projections. This growth has been accompanied by a stable user base in the U.S., reinforcing Reddit's ability to maintain a strong core while expanding internationally. Analysts from Jefferies, Deutsche Bank, and Morgan Stanley have raised their price targets, citing Reddit's potential to capture a larger share of the digital advertising market. Akin to peers like Snap and Pinterest, Reddit's upward trajectory reflects its evolving role in the digital economy, with investors optimistic about its long-term potential despite the competitive social media landscape. The company's ability to attract advertisers and leverage its user-generated content for AI applications positions it as a formidable player in the sector. While challenges remain in scaling advertising effectively, Reddit's current momentum and strategic execution have set a positive tone among investors, solidifying its status as a standout performer in the social media industry.
Fullerton Financial, backed by Singapore's Temasek, is intensifying its presence in the Indian financial services sector with a planned investment of 2,000 crore rupees into lending cart finance. This move comes 4 years after Fullerton's exit from India due to pandemic-related disruptions. The fresh capital aims to bolster lending cart's capital adequacy ratio and expand its loan book by threefold, positioning it as a prominent mid-tier finance company. The investment will also enable lending cart to book secured loans on its balance sheet, marking a strategic shift from sourcing loans for partner banks and finance companies. Fullerton has increased its stake in Lending Cart Technologies, the holding company, from 38% to 56% by investing over 250 crore rupees in FY25, taking management control and appointing Prashant Kumar Joshi as the new managing director. Despite lending Cart Finance reporting a loss of 288 crore rupees in FY25 due to issues in its unsecured loan book, Fullerton remains optimistic about the Indian market. This strategic investment underscores a broader trend of finance companies regaining personal loan market share from banks, which had increased during the pandemic when Fullerton exited India, selling its stake in Fullerton India Credit to Japan's Sumitomo Mitsui Financial Group.
Netflix's stock has recently garnered significant attention from financial analysts, with 22 experts weighing in over the past 3 months. The consensus reflects a mix of bullish and bearish sentiments, with the average 12-month price target set at $1,428.18. This represents a 9.85% increase from the previous target of $1,300.09, indicating a positive outlook on Netflix's market performance. The high estimate reaches $1,600, while the low is $1,100, showcasing a broad range of expectations. Analysts' evaluations are crucial for investors seeking to understand Netflix's market standing, especially as the company continues to expand its global subscriber base, now exceeding 300 million. Netflix's financial metrics further underline its robust market position. The company achieved a 15.9% revenue growth rate as of June 30, 2025, outperforming peers in the communication services sector. Its net margin stands at an impressive 28.21%, reflecting strong profitability and cost management. Additionally, Netflix's return on equity, ROE, and return on assets, ROA, are 12.76% and 5.94%, respectively, both surpassing industry averages. The firm's debt-to-equity ratio of 0.58 indicates a solid financial structure, suggesting prudent debt management. These factors contribute to Netflix's substantial market capitalization, which is above the industry average, signaling strong investor confidence.